Hello everyone. In this video, we are going to discuss about accounting equation. Firstly, we will see what is accounting equation, then we will move on to the problems. Accounting equation tells us that the assets and liabilities of a firm are equal. The equation is assets is equals to liabilities plus capital. This equation is also known as balance sheet equation. This equation is based on a concept called dual aspect concept. In accounting concepts, we have a concept called dual aspect concept. This concept states that every business transaction has two aspects. One is giving aspect and another one is receiving aspect. For example, if we are purchasing goods by cash, then we are receiving goods and paying cash in return. Thus, receiving goods will be the receiving aspect and paying cash is the giving aspect. So every business transaction has a debit and a credit, and the sum of the debit accounts must be equal to credit accounts. This is the fundamental rule which is applicable for all business transactions. In fact, the whole double entry system is based on this concept. Now if we are asked to put the transactions in the accounting equation format, then how are we going to substitute the expenses, incomes, assets, liabilities and capital amounts in the equation? In the equation, we already have assets, liabilities and capital. So when we purchase an asset, we will mention it under assets. And then we take loan, we will mention it under liabilities because loan is a liability. Finally, opening capital we will mention under capital. We are left with income and expenses transactions. Expenses and income transactions will affect both the sides of equation. One rule we should always remember is expenses and losses decreases capital or owner's equity, and incomes and gains increases capital, that is owner's equity. All these business transactions may affect either both sides of the equation by the same amount or one side of the equation only by increasing or decreasing it by equal amounts. Let's understand this by solving a problem. This is a problem. Here I have taken 20 transactions which covers almost all scenarios. This is a format for accounting equation problem. Here I have included one extra column next to the transactions, that is number of accounts. This is just for explanation purpose. The other columns are according to the problem. Our first transaction is business started with a capital of 1 lakh. This transaction affects two accounts, that is cash as well as capital. Cash is an asset and capital is a liability. Even though capital is invested by the proprietor, we consider capital as liability because as per business entity concept, the owner is different from the business. That is the reason we consider opening cash as well as capital. 1 lakh under cash and 1 lakh under capital. So both assets and liabilities plus capital are matching with each other. Next transaction is purchased machinery 10,000. This transaction affects two accounts, that is cash and machinery. Both are assets. Here we are purchasing machinery with the available cash. So cash values will decrease and we will add an extra column under assets for the new asset, that is machinery. So 1 lakh minus 10,000 comes to 90,000. Cash value is 90,000 and for machinery it is 10,000. Capital amount remains same, that is 1 lakh. So total assets equal to 1 lakh and liabilities plus capital is 1 lakh. Our next transaction is purchase stock by cash 5,000. This transaction affects two accounts, that is cash and stock. Here also we are purchasing stock with the available cash. So cash decreases and we will add an extra column for stock under assets because stock is also an asset. Now we will deduct 5,000 from 90,000 which comes to 85,000. So cash value is 85,000. Machinery amount remains same, that is 10,000. And for stock it is 5,000. Capital amount is 1 lakh. The asset side total is 1 lakh and liability side total is also 1 lakh. Both the totals are matching. Next transaction is purchase goods on credit basis 2000. Here we are purchasing goods on credit basis. So we are not using the cash. So this transaction affects only stock, and also we will add a new column under liabilities for creditors or suppliers. Both are same. Cash value is 85,000 and missionary value is 10,000, and for stock we add 2,000. So 5,000 plus 2,000 comes to 7,000. Under creditors we mention 2,000 and capital remains same, that is 1 lakh. Now if we add assets and liabilities plus capital, it comes to 1,02,000 on asset side and 1,02,000 on liabilities plus capital side. Next transaction is goods returned to the supplier 1,000. In the problem, it clearly states that goods which are purchased on credit basis return back to supplier. On credit basis we have purchased 2,000. Now we are returning 1,000 worth of goods. This transaction affects stock and creditors. So we will decrease stock by 1,000 because we are returning 1,000 worth of goods back to the supplier. And also we will decrease the creditors by 1,000 because our liability is decreasing by 1,000. Cash value is 85,000 and missionary value is 10,000. And after decreasing 1,000 from 7,000 we get 6,000. So stock value is 6,000. And the creditors, after deducting 1,000 from 2,000 we get 1,000. So creditors value is 1,000. Capital remains same, that is 1 lakh. Asset side total is 1,01,000 and liability side total is 1,01,000. Both the sides totals are matching with each other. Our next transaction is sold goods costing 3,000 for 9,000. This transaction affects three accounts, that is stock, cash and capital. We have already discussed that revenues will increase the capital and expenses will decrease the capital. Here we are selling goods on cash basis. So we are generating the revenue. Cost of goods is 3,000 and we have sold it for 9,000. So 9,000 minus 3,000 comes to 6,000. So this 6,000 is our profit. 9,000 is the total amount that we have received from our customers. So 9,000 we will add it to cash and 3,000 we will deduct it from the stock. And 6,000 we will add it to capital because 6,000 is the profit. After adding total sales value to the cash value is 94,000 and missionary value is 10,000 and stock value is 3,000. Creditors is 1,000 and for capital we have added 6,000, that is profit. So the capital value after adding the profit is 1,06,000. The asset side total is 1,07,000 and liability side total is also 1,07,000. Both the sides totals are matching with each other. Next transaction is sold goods costing 1,000 for 3,000 to Ram on credit basis, not on cash basis. So this transaction affects stock, debtors and capital. And this transaction will not affect cash because we have sold the goods on credit basis. This transaction affects stock, debtors and capital. So stock value we will decrease it by 1,000 and we will create a new column under assets for debtors and we will mention 3,000 in the debtors column and we will add 2,000, that is profit, to the capital amount. After adding and deducting the amount, the cash value is 94,000, missionary value is 10,000, stock is 2,000, debtors is 3,000, creditors is 1,000 and the capital amount after adding profit is 1,08,000. Asset side total is 1,09,000 and liability side total is also 1,09,000. Both the sides totals are matching with each other. Our next transaction is rent paid 100. Paying rent is an expense. We've already discussed that expenses decrease the capital. So this transaction affects cash and capital accounts. Since we have paid the rent from the available cash, we will deduct the rent amount from cash. That is 94,000 minus 100. And also we will deduct this rent amount from capital. That is 1,08,000 minus 100. After deducting the amounts, the cash value is 93,900 and missionary value is 10,000. Stock is 2,000. Debtors is 3,000. Creditors is 1,000 and capital is 1,07,900. Asset side total is 1,08,900 and liability side total is 1,08,900. Here also both the sides totals are matching with each other. Our next transaction is outstanding salaries 100. Outstanding salaries are nothing but the salaries that are yet to be paid. So outstanding salaries is a liability. Under asset side there won't be any change. On the liability side we will create an extra column for outstanding salaries and we will mention 100 in the new column, that is under outstanding salaries. And from capital amount we will deduct this outstanding salaries amount. After adding and deducting the outstanding salaries amount, the total of asset side is 1,08,900 and total of liabilities plus capital side is 1,08,900. Both the sides totals are matching with each other. Our next transaction is prepaid insurance. Here we are paying the insurance amount in advance. Hence prepaid insurance is considered as an asset. This is not considered as an expense. Since we are paying the insurance amount from the available cash, we will deduct the insurance amount from cash. And also we will create a new column under asset side for prepaid insurance. After deducting the prepaid insurance amount from cash, the cash value is 93,600. Missionary, stock, debtors remain same and prepaid insurance is 300. There won't be any change on the liability side. The total on the asset side is 1,08,900 and total on the liability side is 1,08,900. Both the totals are matching with each other. Our next transaction is payment made to creditors in full settlement of 900. Goods purchased on credit basis is 2,000. Among that we have returned back 1,000 worth of goods to the supplier. So the business is liable to pay only 1,000 to the creditor or supplier. Here in the problem it says payment made to creditors in full settlement of 900. We are supposed to pay 1,000 to our suppliers, but we have paid only 900. So 100 is a profit. Otherwise we can call it as discount received. Discount received is a gain or profit. This transaction affects cash, creditors and capital accounts. Since we have paid to creditors from the available cash, we will deduct 900 from the cash value and we will deduct 1,000 from creditors. And also we will add 100 to the capital because 100 is a gain or profit. After deducting and adding the amounts, the cash value is 92,700 and creditors value is 0 and capital value is 1,07,900. The remaining account balances will remain same. The asset side total is 1,08,000 and liability side total is 1,08,000. Both the totals are matching with each other. Our next transaction is received 3,000 cash from Ram. Ram is our customer, that is debtors. This transaction affects cash and debtors. Since we have received cash from our customer, we will add this amount to cash and we will deduct this amount from debtors because we have already received the amount from our customer. So after adding 3,000 to cash, the cash value is 95,700 and the debtors value will be 0. The remaining accounts remain unchanged. The asset side total is 1,08,000 and liability side total is 1,08,000. Both the totals are matching with each other. And next transaction is introduce 20,000 as extra capital. Whenever we introduce some cash as a capital, we will consider that amount for cash as well as capital. So we will add this 20,000 to cash and also we will add this 20,000 to capital. After adding this 20,000 to cash and capital, the cash value is 1,15,700 and capital value is 1,27,900 and the remaining amounts remain same. The total on the asset side is 1,28,000 and total on the liability side is 1,28,000. Both the totals are matching with each other. Our next transaction is cash 4,000 withdrawn for personal use. This transaction affects cash and capital. Withdrawing money for personal use is considered as an expense. Expense decreases the capital. Since we have withdrawn the money from the available cash, we will deduct this 4,000 from cash value. And also we will deduct this 4,000 from capital. After deducting this amount from cash and capital, the cash balance is 1,11,700 and the remaining account balances will remain same and the capital balance is 1,23,900. Asset side total is 1,24,000 and liability side total is 1,24,000. Both the totals are matching with each other. And next transaction is commission received 1,000. This transaction affects cash as well as capital. Commission received is an income. We have already discussed that incomes will increase the capital. So we will add this commission received amount to cash and also to capital. After adding the commission amount to cash and capital, the cash balance is 1,12,700 and the other remaining account balances will remain same and the capital balance is 1,24,900. Asset side total is 1,25,000 and liability side total is 1,25,000. Both the totals are matching with each other. Next transaction is accrued interest 500. Accrued interest is an income which we have earned but we have not received. This transaction affects capital and accrued interest. Under asset side, we will create an extra column for accrued interest and we will mention 500 in the new column. And also we will add this 500 to capital because it is accrued interest we will receive in future. So we are adding this 500 to capital. Accrued interest is 500 and the capital value is 1,25,400. The remaining account balances will remain same. The total on the asset side is 1,25,500 and total on the liability side is 1,25,500. Both the totals on asset side and liability side are matching with each other. Next transaction is rent received in advance 300. This transaction affects cash and rent received in advance account. Here we have received the rent in advance. So business consider rent received in advance as a liability. So we will add an extra column under liability side for rent received in advance. And we'll add this rent received amount to the cash and also we'll mention this rent received in the new column under liability side. After adding this amount, the cash balance is 1,13,000. Missionary, stock, debtors, prepaid, accrued interest will remain same. And rent received in advance balance is 300. Outstanding salaries, creditors and capital will be same. The total on the asset side is 1,25,800 and total on the liability side is 1,25,800. So both the totals are matching with each other. Next transaction is charge depreciation on missionary 10%. Depreciation is considered as an expense. We know that expense will decrease the capital. So this transaction affects missionary value and also capital. So 10% on 1 lakh comes to 1000. We will deduct this 1000 from the missionary value and also we will deduct this 1000 from capital. After deducting, the missionary value is 9,000 and the capital value is 1,24,400. All the remaining amounts, that is cash, stock, debtors, prepaid insurance, accrued interest, rent received, outstanding salaries, creditors will remain same. The asset side total is 1,24,800 and liability side total is 1,24,800. Both the side totals are matching with each other. Next transaction is interest on capital 1,000. Interest on capital is an expense to the business and income to the owner or the proprietor. This transaction affects only capital. We will add and deduct this amount to capital. Since we are adding and deducting this amount to capital, the values will remain unchanged. There won't be any change in the account balances. The asset side total is 1,24,800 and liability side total is 1,24,800. Both the totals are matching with each other. Our next transaction is interest on drawings 500. Interest on drawings is an expense to the owner or the proprietor and gain to the business. Even for this transaction, we will add and deduct 500 to capital. The balances of all accounts will remain unchanged because we are adding and deducting the amount from capital on same side. Hope you guys have understood the explanation. If you guys have any questions relating to this problem, please post in the comment section below. And if you guys like the explanation, do not forget to click on the subscribe button. And thanks a lot for watching this video.